Um, and welcome and thank you for joining us this afternoon. I thought let's just begin with something different. We normally kind of post this right at the end, and I don't know if we kind of were just a bit like fatigued through Teams and things. So let's just kind of go back to why are we asking you to listen to us? And a big part of this is it's a really good proposition that Vitality offers. It's a fantastic cover. We are winning awards. We keep getting voted like the best critical illness, even though it's a serious illness cover contract. And I think the bit for me that really stands out, because, of course, Ollie and myself, we work at Vitality, we passionately believe in it. But when you then look at a third-party agency like Protection Guru, who is F&TRC, so they do all the research, they have panels of doctors who analyse all the different insurance companies' critical illness definitions, and they rank them and they score them based on the likelihood of being able to make a claim under the different definitions in the market. And to be sort of fair, they only look at conditions that everybody has on their plans. So these scores, where Vitality comes out as first and third, does not take into account all of the unique conditions that Vitality has. So on a policy, you'll find that Vitality has 38 unique conditions. We'll talk a little bit more about that. These scores are excluding a big chunk of the cover that we have on there. But I think to get doctors to read the definitions and say that we are best in class, I think that for itself really speaks volumes. And I don't believe there are many people out there where when they're buying something like insurance that of peace of mind or family protection, that would ever say to you, "Oh, I'm not bothered about the quality of it. I just give me the cheapest. Just doesn't really matter about the quality." I just think they won't realise there is such a difference in the quality between providers, and we really can stand out there. So then we just want to use this to kind of then show you a bit more of the why it really is so good. And I think one thing to think about with a critical illness cover plan, there are a couple of gaps. This was designed about 40 years ago to meet a need when we were just really kind of catching up with being able to diagnose cancers, and we were kind of the forefront of kind of a lot of the sort of the improvements we've had around medical research and operations and medications. And so it was like your cancers, your heart attacks, your strokes would mainly prove fatal. And that's where the critical illness plan came from, that really critical stage. It accelerated a death benefit payment to make sure it could pay out sooner. But that actually does leave a gap. And what you can see here is when someone's just been diagnosed with something, it might just be a diagnosis, or it's a condition that could get considerably worse. Critical illness does not pay out. But when you look at Vitality, we can pay out on diagnosis of many conditions. We can pay out because a client's joined the hospital waiting list for a number of conditions. We can pay out when it's the earlier stages of a condition which could potentially progress and get much more serious. So we give people access to money sooner, which is, when you think about what this is trying to do, it's trying to remove the financial stress and strain that people will be under. So in you're dealing with a medical condition, you're also having to deal with financial stress. And the two do not go well together. You're not going to recover quickly when you're worrying about paying the bills. So money sooner is one key takeaway. We pay out at the same point as well as when a critical illness plan would pay out. Big tick in the box. But then at that point, that's when typically all critical illness plans end. There is no more cover in the pot, that's it, it's gone. And I have been in a situation many times when a claim has been paid, and I go to see an advisor, and the question will be, the client is really happy, the client wished they had bought more cover. I gave them a choice of different levels of cover, and the client was like, "I know you did," and I went for the lower level. "I really wish we'd bought more, and can I buy more now? Because now I realise how good being protected is and what difference it has made to the family." And at that point, you've got to kind of turn around and go, it's too late now for many people. You can't have it today. We might be able to look at more cover in 5, 6, 7 years' time. And that's kind of not good enough. And again, we'll look at some stats around that. But with Vitality, we can keep the cover in place. So it can pay out more than once, and it can pay out multiple times. So again, we'll take a little look at this because, again, it meets the reality of people and their lives and when they want to have more cover. This, again, is kind of independent breakdown, looking at the sort of 7 different body systems, where you're actually looking at the average critical illness plan, you're looking at the best critical illness plan, and then you're looking at Vitality. And Vitality with Serious Illness Cover Plus, we offer 100% of all the conditions in the market. We are pioneering. We are the benchmark, as in who covers the most. It is Vitality. But you can really see we are head and shoulders in certain areas like kidney, urogenital, gastrointestinal. And these are not just areas where it's kind of, oh yeah, you're offering a lot of cover in these areas and people do not need to claim on them. Things like Crohn's disease is, I found it's really common. And I know lots of advisors that suffer from Crohn's disease. So to then say that this cover is maybe showing higher levels because it's things someone doesn't claim on is really not true. So when you then look at, well, how many people in the UK are suffering from things like irregular heartbeat? 2 million. People that need kidney dialysis, and I had a family member that needed dialysis, and now kind of subsequently you keep hearing about people that need things like dialysis, 1.8 million. Things like Crohn's, inflammatory bowel disease, the numbers are really significant. And pulmonary embolism is only covered by Vitality. 25,000 each year hospitalizations because of pulmonary embolism. So it really just shows that this is significant levels of cover and more cover than you will find anywhere else. And people are suffering from these conditions. And I think there's a great example. We've not included it in today's, but it's something Holly could go for another time. To really get that understanding of Vitality pays out sooner and what that actually means when you think about the severity of the condition, it's things like blindness. And again, Holly could do that another time, because I think that really, it shows that when we're saying something is less severe, it doesn't mean the impact is not severe. It just means that other companies wouldn't be paying anything, but Vitality can. And again, things around blindness, there's a lot of people would really benefit financially. And for me, I'm a very visual person, so for me, I find this works. If we were to look at if we could stand, we can very soon stand in a room of people, but if we could have a room of people and then we could just kind of look around and just go, everyone in this room, as it stands, you would be able to make a claim on any product in the market. But then if we start to think about, okay, so if Vitality is offering more cover and this ability to have multiple claims, what difference would that make? And you then start to populate this using our stats from last year to then go, well, who are the clients? So all of these additional people that have now appeared, they're all the people that would be able to make a claim for a unique condition. So 1 in 12 of our claimants could only have got a payment from Vitality. And I think a stat's a stat, and they don't always resonate, but I think visually, you then go, well, that's a lot of people in that room. You then think about, okay, so Vitality doesn't just pay out once, it can pay out multiple times, but really, how many times do people claim multiple times? So then you pull in our stats for 1 in 11 of our claimants who are on their second, third or more claim. You then start to think there's a lot of people wearing colour in this room that would not have had any benefit paid to them unless they had been with Vitality. And the stat there is you combine those two things together, you then go, well, that's 1 in 6 of Vitality's claimant, either because of the unique nature of that condition or the fact that they're on a multiple claim, they're on the second, third or more claim. 1 in 6 claimants would not have had any money from any other product in the market. And for me, that's can we gamble with clients' lives when we know statistically they are more likely to get money sooner for more conditions and for longer. And I think that for me is kind of the key takeaway. If we then pull this into a case study, and I know there's a lot on here, and apologies for that. We're not always saying that you have to have lots and lots of cover. You know, I'm a firm believer, because something's always better than nothing. And it is a brilliant contract, which means, you know, the pricing, depending on the optimizer or whether it's standard pricing, you get what you pay for. And if you want a quality product, you would expect it's going to have a premium attached. That said, we are really competitive, and I know Ollie will be able to answer those questions around optimizer. It's the best way to get the best quality at the best price. But in this example, a real claim, you know, he's anonymised for his privacy, but he had £40,000 of life cover, and he had £8,000 of serious illness cover. And he was diagnosed with stage 3 kidney disease, so about 1.8 million in the UK suffer from that. So we were able to pay him 50% of his serious illness cover. So we got £4,000. So, you know, he's still able to live his life, but £4,000. Unfortunately, you know, he goes on to dialysis, but unfortunately his condition has deteriorated. So the way the policy works is, because severity is increased, we're then going to end up paying the next severity level up. So he was eligible for 100% of his benefits, so he gets £8,000 in total. Now, despite having received all of his serious illness cover, his £8,000, the way our policy works, his life cover has reduced. He still has £6,400 of serious illness cover left. So in the client's mind is, I've had all of my cover for serious illnesses. I've just received a statement, I've barely used any. It's like I've only used £1,600, yet I've had £8,000. That's when you get this kind of element of delight and surprise from the client, because they're like, wow, this policy is really good. I didn't think it would do this. I don't remember being told it had the ability to pay out multiple times and that it was going to kind of replenish itself. So that's kind of one thing that we all want is, you know, we want customers to be delighted and really pleased with their purchases. And when you then look at, well, how long does it take before people claim a second time? Because, you know, I'm saying we might be able to offer you terms in 5, 6, 7 years' time. And what we actually see is the difference between people making a claim is only, you know, it's a matter of months. 22 months for cancers, 29 months for heart attack, you know, other conditions, you know, just over a year. It just shows how soon people need to make that second claim. And this is just to illustrate, well, how have we done that? How have we managed to take £8,000 of cover, and after paying out £8,000, how have we still left £6,400 for the client to claim on? And it's really simple, and it doesn't cost anything. This is just how Vitality plans work, where you've got life and serious illness cover, and especially where you have more life cover than you do serious illness cover. So for budget purposes, that's the norm. More people have more life cover than they would serious illness cover. And with Vitality, the system behind the scenes is reading this as what you've created. It reads the serious illness cover is 20% of the life cover. And you can choose whatever amounts you want. The system will work out the percentage. When we've paid out £8,000, the life cover will reduce, assuming we've not used some of the protectors, which I'll mention in a moment. Life cover reduces to £32,000. That's fine. That's how a normal life and early critical illness plan would work. But then remember, the system is thinking, well, 20% is how much a serious illness cover is. So 20% of 32,000 is 6,400. So this just automatically happens. This is when the statement goes out to the client to let them know what their new levels of cover are. There's no underwriting, there's no change in premium, we're not adding new exclusions or anything to the policy. The cover is there again, ready for them to make more claims and get more value. So in a way, it's like taking that element of life cover and moving it over to the serious illness cover to allow them to claim again And again, statistically, you're more likely to claim under serious illness cover than you are to die in the years you're repaying your mortgage. So again, it's moving the cover to where you need it most, as opposed to just leaving them with an element of life cover, which, thankfully, lots of people will outlive their policies. And again, it just shows you can do this again. You could claim another 100%. His life cover will reduce. We're going to then look at 20% of the new life cover amount, reinstate more cover. And he could just keep doing this. So, and again, and he could claim, in this example, up to £24,000 worth of serious illness cover. So he's paid for 8, but he could get up to 24,000. And then again, that for me is more people would buy more life cover than serious illness cover around affordability, but Vitality will give you more. So we all like to kind of make things simpler, and I'm not saying that you need to remember a big maths lesson or do big diagrams or anything for a client. Just simply remember that when your client is having less serious illness cover than life cover, and they would like to have more, think Vitality, because Vitality will give them more with the way that the policy works. Simple as just think Vitality for those examples. And we can share with you like a mini spreadsheet which kind of does a simpler version of this if you'd like to have something documented for your client. So I really like the plan account. For me, you know, when you're looking at a portal and you're looking at the price comparisons, and you've put in, say, 40,000 and 8,000, just remember that actually you're getting more than 8,000 when you're looking at Vitality. So if there is a bit of a price discrepancy, that's the value conversation. It's still worth having a conversation about Vitality with your client. So there's life cover, really straightforward. No really need to kind of explain further on that one. Serious illness cover, income protection, which we'll mention towards the end. Serious illness cover for children, and again, you can add that to a life-only policy, which again, only one other company in the market would do life cover for the adults with serious illness cover for the children. So again, budgets to meet, parents want to make sure their children are protected, brilliant opportunity to make sure that they have cover. And something that we don't often talk about, but we'll include today, and because Holly is a really big advocate for this, family income cover. And again, it's just another way, an affordable way of being able to offer more cover back to a family. So you can go beyond just making sure the home has been repaid or the mortgage has been paid off. If someone's income has ceased to come into the household, either because they've died or had a critical illness, then we can get more money as a regular income, like a regular salary replacement into the household. And Optimizer, which again, another time, you know, if you've got questions around Optimizer, Holly would be really good at helping you position that, one, sort of for your own understanding, but two, how to position that to your client in a really quick and simple way. So the basic life cover policy, really nice, straightforward, has all the things you'd expect it to have. You know, Vitality, but we've got a few unique elements and some things that are quite sort of different. But at the end of the day, the chassis of Vitality is exactly the same as you would expect to find anywhere else. Level, index, decreasing cover, term products, immediate cover, whilst the application's going through underwriting, once we've given terms, mortgage-free cover until you actually activate the policy, and guaranteed insurability options. The serious illness cover choices, there is slightly more than this, but in you know, the basic is 153 and 182 conditions, whether you want to go sick or sick plus. So sick is incredibly good, and sick comes with 62 conditions at 100%. That's on both of those products. If you were thinking, I know there are some conditions covered at 100%, which on a serious illness cover contract are not at 100%. If that's really important to you, if that's really important to your client, then they could use something like mortgage sick or serious illness cover booster. Then we will have 81 conditions at 100%. That then means that almost all conditions at 100% across all products in the market are in one plan.
And again, that is where you get that extra element of uniqueness, more opportunity to receive their benefits sooner. And again, remembering that we've got Optimiser, which is all around keeping that quality, keeping that ability to make a claim, having the best cover, but having it at a similar price to a standard policy in the market. There's things on there like protected life cover. So you might want to place a policy in trust. You might be wanting to make sure that no matter what happens, there's 100% life cover there to pay off the mortgage. Tick a box, protected life cover will change our policy from life with earlier serious illness cover to life and additional serious illness cover. So you've got double bubble. So effectively you can claim all of your serious illness cover up to 3 times, and on top of that have your life cover in place. And protected life and serious illness cover, that's just kind of taking that one stage further. So it's still giving you the life and serious illness cover. It just means, unlike the first example where I showed you serious illness cover was coming down every time they've had a claim, because that percentage reinstating slightly less. With serious illness cover protected, it remains at 100%. So again, absolute Rolls Royce of cover. But again, it might not be something you'd recommend for every client because, budget permitting, our usual cover with those multiple claims is outstanding. You might just want to look at something like a booster or protected life cover if you want to upgrade your cover. And the last point on there is, I think, partly for those people who go, oh, insurance, what if I don't claim? Where's the value on my policy if I didn't make a claim? What do I get back? And I think with Vitality, you've got 2 things. So with Vitality, you've got all the rewards, the discounts, the sort of the encouragement to look after your health, which I think in terms of an ask, if someone was asking me to do something and I realised, oh, actually what you're asking me to do is just in my interest, it's in my best interest to stay healthy, then is that really a big ask at all? Because who's the net beneficiary? Me, all along. Managing my premiums, managing my health, having the best cover in the market. But even for those who then go, could I get more? Something like dementia and frail care cover is a way of making sure that this cover goes beyond even when you've quoted it to. So we quote most cover until the end of someone's mortgage, until when the mortgage is fully repaid. And if a client has not claimed on their policy and it's been level or indexed, if the client has claimed and they still have cover left because of the way the plan works, if they've ticked the box to have dementia and frail care cover, which doesn't cost anything, it then gives the client the opportunity at the end of the plan to convert it over to what we call dementia and frail care cover, which means unused life cover. 10% of that can go to be a funeral plan, which again will just run until it's required, and 50% of any remaining serious illness cover becomes dementia and frail care cover. So if someone suffers from Parkinson's, Alzheimer's or dementia, plan can pay out. If they need long-term care, again, if they lose personal sort of independence, a policy can pay out on that element. It's just a brilliant way of adding more value, and given that the newspapers, the headlines and the radio are constantly talking about the cost of later life care, it lands really well because it allows people to defer making a decision until they've paid the mortgage off. Again, no cost, no price changes, even when they use the option. And something else which I really like is signature-free trust. More and more business is written in trust. Obtaining signatures can be a bit of a nightmare. So again, to be able to just place a policy in trust online as part of an application makes life really simple. And I know that some of the frequent questions we get asked is, can I have trustees which are overseas? Again, using the signature-free trust system makes that easier. The system won't recognise kind of the equivalent of a postcode, but you can free text type in somebody's address, so we can facilitate that. The only thing to remember if you're using trustees which are not based in the UK is at the point of claim, benefit proceeds need to be paid into a UK bank account. So at least someone should have a UK bank account to be able to, for us to pay the money into it. But if you want your trustees to be based elsewhere, that's fine. And something to get around that might be that the trustees overseas could just employ a solicitor in the UK to facilitate the payment of the funds for them, if they so wished. So for the serious illness cover, I think it's kind of, key reasons why is it covers more conditions, no limit to the number of claims, pays out multiple times, especially when you're looking at heart attacks, which we can pay out at the same level, doesn't always have to be a higher severity. Sick Plus, we do a boost on subsequent cancer claims. The fact that more people are claiming on our unique conditions, more people are claiming multiple times, and if you look at people in their 30s, 1 in 7 of people in their 30s with Vitality were claiming on our unique conditions. So it just shows there's a lot of cover which is more beneficial to those people kind of in their 30s and 40s, as well as having all the good cover for all age groups. So if you do have any questions, just ping them into the chat and we'll come back to them. Real quick one on the family income cover. So again, this is on a life-only basis or a life and serious illness cover basis. Couple of options. Rather than a lump sum, it pays out a monthly income should somebody die or suffer from that illness. The plan includes some really nice features. Minimum payment period, which just means no matter when you make a claim, you have a guarantee that we will pay no less than either 1 year's worth of benefit or 2 years' worth of benefit. So again, peace of mind, value for money. Both of the plans include a funeral benefit. So again, costs of funerals are expensive, kind of typically around £4,000 or £5,000. So this is money towards paying for a funeral. You can have indexation on there. Again, we said it could be serious illness cover. It's exactly the same serious illness cover that you'll find elsewhere. And we've got something called Spend Protector on Family Income Cover Plus, and I'll mention that one in a moment. And you can also increase those minimum payment periods if you would like. So you can have an option to make sure that the policy pays out for no less than 5 or 10 years in the event of a claim. So you're in the last year of your policy, you've got a 5 years guarantee on the plan. If you're in the last year when you made a claim, it paid for 4 years beyond the end of the term. So that's what the guaranteed payment option is. It just means in the event of a claim, it continues. It is really inexpensive. So in my example here, client 37 takes out an 18-year term policy, which pays, in the event of a claim, £1,500 per month. This is on a life-only basis. So maybe he's done mortgage protection on another plan with us, but just wants to have this kind of level amount of cover to pay a regular income to the household, £13.35 a month or £15 of income cover plus. They're really inexpensive, and it's easier for some people to manage a regular income than a lump sum. A lump sum, kind of exciting. What should I do with it? Car, house, holidays. Where £1,500 a month, it's more manageable, and people can go, well, that's paying the bills, that's buying clothes and food for the kids. It's an easier amount of money to manage, and it's truly replacing the lost income that was coming into the household. Really simple when you're quoting it online as well. You select whether you want standard income cover or income cover plus, how much benefit, the term, and whether you want to use one of our guaranteed payment terms or just the standard 1 or 2 years that will come with the policy. So really quick, simple. Spend Protector, which I mentioned, which is on Family Income Cover Plus. In addition to your benefit, all household bills, council tax, utility bills, broadband, gas, electric, you know it, we would cover all of those costs in addition to the benefit that we're paying them, because that's the insured benefit. So Income Cover Plus really is thinking about what happens after you've lost a person in your household that was bringing in the wages or the salary, and it really takes away all that pressure for the first year to really allow people to adapt and change and sort of look after themselves. So it's a really nice bonus. And finally, income protection. So I think income protection, you will have seen so much sort of conversations, and all the providers talk about income protection, because I think income protection during kind of COVID and first lockdowns, everyone suddenly realised that furlough scheme that came out was protecting income, and it was protecting the percentage of income. It's protecting 80% of people's incomes. But income protection does a very similar thing. But rather than it being a state-driven construct, this is something that everyone can take out for themselves. So if they're unable to work, accident, illness, poor health, if they're unable to do their own occupation, they can receive a monthly percentage of their income. With Vitality, again, we've got a few different options, but you'll find these options elsewhere in the market as well. But I'm going to then pick out what are the sort of the USPs within our income protection. So we've got short-term income protection that pays out 2 years per claim. 6 months back at work, you can claim again on the same condition, on the same plan, no change in premium. So that works out about 50% of a standard IP plan, so a great budget tool. And I think when you work short-term income protection with serious illness cover, the two go together really well. Because a condition that lasts for 2 years is likely to be triggering a serious illness benefit claim, so you're kind of getting the regular income and the lump sum. So there's a few things on there, so things like back to work benefit. Ask most providers when does their benefit cease, and it'll be as soon as the client is able to go back to work. With Vitality, if they have gone back to work, not everyone's income returns to 100% because they're working and they need to invoice people, get the bills, wait for commission to pay. Think about our roles. We need deals to complete, we need providers to pay commission. That's when we get paid. So with the Vitality plan, the back to work benefit means we continue to pay benefits in the first and the second month back. And you can see the numbers on there. That's the percentage of the insured benefit we continue to pay. So really good for anyone who's in a role where their income will not be 100% as soon as they go back to work. One really good USP is our support for the public sector. So people who work for the NHS, so all NHS employees, people who are teachers in the state schools and the academies, and people who work for the local authority, so the council office workers. We will offer them a simplified income protection, and I'm saying simple in terms of it's easier to set up and put in place, because their sickness benefits tend to be so many months at full pay, so many months at half pay, depending on your years of service. How long you get paid on each of those varies, which can then be tricky when you're trying to align an income protection plan to match. The other thing that we do that's really good with Vitality income protection is sort of just from a practical point of view. If you were working and you're getting 100% of your pay, your gross pay, you don't take home 100% because it's taxed. We've got income tax, we've got national insurance. That tends to take about a third to 40%. But what a lot of providers will do is they will look at how much income protection you have, they'll look at what your income is, and they will remove 100%. So they would remove everything that you get paid gross from your employer. So if you get sick pay, they would go, well, your sick pay is £1,000, your insured benefit is £1,500, we're going to pay you £500 whilst you're on sick pay. But with Vitality, we look at this slightly different, and we go, well, you're not actually getting £1,000, you're really getting £600. So we'll pay you £1,100. So Vitality, Legal & General and LV are the only three companies in the market that actually offer clients more money when they're on sick pay. So another thing I would say is, where you have clients wanting income protection, where you have clients that have sick pay, again, think Vitality, because Vitality can pay more. And I'm just trying to give you these ideas of who is a Vitality client and when should you be thinking about Vitality. Oh, that slide's built really badly, so I'm glad I described it on the other slide, so apologies for that one. That build is dreadful. The public sector deferred periods, I mentioned you get different amounts of time at full pay and half pay. This one is for the NHS and the local council workers, but you can just see, depending on your years of service, it varies. You can't find 4-month and an 8-month deferred period, which you would need to attach to the third year. You can't find 5-month and a 10-month deferred period for the fourth year. This is why it can be quite tricky. So with Vitality, we've made it simple. So you calculate the maximum benefit you would want for the client based upon their income, and we can cover 60% of the first 60,000. Just choose a 12 months deferred period. Just put all of that benefit that they would like to have at 12 months, which means they will get a better premium because it's a longer waiting period. They won't have to wait that long, because as soon as, during the claim, as soon as we see that their employer has dropped them to half pay, that is when we will start to pay 50% of the benefit. And when all of their pay stops, that's when we give them 100% of their benefit. So again, this is just simplifying sick pay arrangements and making income protection more affordable and simpler for everybody in the NHS, local authority council workers, as well as teachers. Something else that we're doing that's really good and unique is we're offering an earnings guarantee. Now, you might think earnings guarantee apply on most providers' income protections, and it does, but it's capped at £1,500. If your clients have a benefit above £1,500, they can still lock in 100% of their benefit, and effectively we're doing all the financial underwriting up front at the time to take out the application, and we just need following. So if you were doing a mortgage for someone, you'd have the last 3 pay slips and a P60, send those to us, and at the point of claim, we will not do any financial underwriting at the point of claim, and they know exactly how much benefit they will receive. So just confirm that, £1,500 automatically guaranteed, you don't need to do anything. Benefits above £1,500, send in the evidence, and that's locked in as a guaranteed benefit until they need to make a claim. So a quick recap there, income protection, a couple of choices. If you want to use the public sector sick pay, it's not available on the short-term option, but it is available on our standard income protection and income protection plus. Otherwise, everything that you see on there, you will get on all income protection plans. And sorry, I've kind of maybe taken a little bit longer than I meant to take on that. So hopefully we're still in on time. If anyone's got any questions. Oh, I stunned you all into silence and went to search.
There's none in the chat as of yet. I don't know if anybody wants to speak up and ask Paul directly. I mean, if there's anything does come to mind following this, as I said at the beginning, you can email me and I can get those questions for you. Thanks, Paul, for that. You know, it was a fantastic kind of overview. I hope you all found it useful. And I hope... Oh, sorry. Vittel, do you want to ask something?
Yeah, I would like to thank you for an incredible presentation. You know, we covered absolutely everything. It was very useful. I recorded everything, so we will use that definitely. May I ask you if it will be possible that I will send that to my managers as well? Can I do it?
We can send the slides across, and if you want to, use your recording and.
That's great. That's great. Yeah. And just one thing, that was about the optimizer, but as you said, I will be speaking with Holly about that. Yeah, so everything.
Yeah, I was just going to say then. Obviously, Paul did quite a big overview there of everything from